Good morning from Orbex head offices in Cyprus. This is your daily Orbex market insights for Tuesday, the 19th of February 2019. My name is Stavros Tousios and I'm your host and analyst. Today we are expecting UK's employment report with a focus on the average earnings, of course, and also Germany's economic sentiment report, two events that cannot go unnoticed. Please note, this is not to be considered as investment advice and losses can exceed profits. Let's jump to the calendar straight away and then right to the charts to identify some potential opportunities. So on the UK first, expectations for average weekly earnings are a little bit lower than the last month's, 3.4 compared to 3.3%. And considering that the UK has had a good run on wages, I wouldn't be surprised if this number comes out actually as expected. In terms of unemployment, we might be a little bit optimistic there, because we're expecting the forecast says that employment rate might come down to 3.9%, and claimant count change, of course, at 2.4. Considering the UK has had last week very poor numbers on GDP, manufacturing production, and also the quarter-to-quarter GDP, I believe that this number is going to come out very close to the expectations. Now let's jump to the charts quickly on the pound, dollar, and then we'll go back to check the economic sentiment indicator. Now on the daily chart for pound dollar, we can clearly see that prices a few weeks ago have crossed above the descending trend line and have created this sort of first wave with a rejection of the 50 Fibonacci retracement. Now from down here, we can expect prices maybe to go a little bit higher because this is supported by a signal that is appearing on the MACD indicator. This is a hidden divergence connecting this multi-month low of 1.2373 and the 1.2796 rejection of the 50 Fibonacci retracement. Now looking at lower time frames, just to get some confirmations, on the 4-hour chart we can also see indeed a divergence here on the MACD with prices and also on the RSI, and we see prices creating some sort of double top over 1.2939, and now we see a short pullback, and we could be expecting prices to go a little bit lower just to retest the descending trend line and then move a little bit higher. Now of course, because we are expecting the figures to come out very shortly, markets are thin, and that can be also confirmed on the 1-hour time frame. Okay, we see that the range is nearly like 40 pips here, and we see that the hourly candle is actually just driving towards the middle Bollinger Band and could be easily piercing that level, maybe creating a range after the release as well. Now, depending on the results, of course, if the expectations are missed, we would be looking at the pound to go lower, maybe to the 0.5 retracement, Fibonacci retracement, which is also coinciding with a previous stop. So we might see a retest of this support zone. In case the results, of course, are positive for the UK, then we could be seeing prices moving up to 129.40 and even higher. Now on the European side, we're expecting the economic sentiment indicator. The expectations are pretty poor, to be honest, and considering an array of weak data that came out from Germany over the past few weeks, I would say, with a highlight last week's GDP, which saw no growth at 0, confirming some sort of recessionary signals. We might be expecting that report to actually come out as expected, which is negative on its own nevertheless. So on the charts, I want to start with the daily on the euro dollar. We'll see that prices have been moving over the past few weeks within a quite wide range over here. Last week, we saw a rejection down at 1.1230, which is a multi-month low, and a nice pin bar over here where prices started increasing. Now, on this chart, I don't see any sort of bullish bias appearing on the charts, so which means that bullish sentiment is not really strong. So for confirmation, of course, we'll need to go down to the 4-hour chart and check what is going on here. On the 4-hour chart, we can notice that we have a bullish divergence between the RSI, the MACD, and of course the prices. But prices again are moving in a range, okay, of 1230, of like nearly 100 pips. We do see that prices have indeed crossed above the descending trend line, okay, which is a good sign for bullish bias, to confirm bullish bias. But if we bear in mind that prices have not really come down much to reach the 50 Fibonacci or the golden ratio at 1.1272, we might see a downward move towards those levels before we head higher up. Now, of course, there is another case that prices could go lower to create another bottom down here at 1.1234. But of course, that would of course depends where the prices are, where the bearish are quite strong, so that they can push the prices below the trend line, and that area pretty much ends up being a false break. For confirmations, again, we will need to go to the lower chart of the 1-hour time frame. Okay, so on the 1-hour time frame, as mentioned before, we don't see any sort of divergent signals here. To the contrary, there is a bearish divergence on the MACD histogram, which indicates that prices could be heading a little bit lower after confirming that this is indeed some sort of head and shoulders pattern, which might take prices lower down to 1.1272 before any sort of further signals are appear on the charts. Now, obviously, depending on the results later in the evening, we will see price action taking some sort of formation depending on those results. Now, there isn't anything else to add. Thank you for watching our daily video. If you like it, hit the like button. In case you want to know more, please visit our blog at orbex.com/blog, where we cover the latest news, publish trading ideas, and provide all the necessary tools to serve you responsibly.